Welcome, everybody. This is the Day Trading Stock Options Daily Review for September 12th, 2016. He's Alan. I'm Scott. We're talking about making 10% in 10 minutes using stock options. Our courses are rock bottom prices. You have no excuse not to take them, and learn about how to do this. And when you do, we give you 30 days free use of the replay, just like this, so you can practice, get good at it, and decide if this is something for you. It's a great deal. Don't hesitate, because this is a way to turn your computer into an ATM. So we're going to show you on September 12th that you could have made 10% in 10 minutes. The last video we did was September 9th. September 9th was a Friday. September 12th is a Monday. September 9th was red. It was gold.
Oh,
I don't know what happened to me. I disappeared.
Yes, you did for a while.
But I am back, and I don't know when it kicked me out. So I'll start kind of.
Monday was red, or Friday was red, and Monday's starting to be green.
And Mondays, did I say it was actually green?
I think so.
Okay. Well, Monday, there's a good likelihood when you have a strong red day that the next day is going to be green, because the market is run on emotion. And when people see something going up, then they're going to think, oh, wow, it's overvalued, and they're going to drive it down, and vice versa. And so that's part of our expectation for the day, is that it's quite likely it's going to be green. It's green right now, as you can see in the screen. That doesn't mean that it actually will be. I mean, we won't know until the day is done. But these are things to keep in mind. If you've got a really strong one in one direction, it may continue really strong the next day, but there's a lot of times when it bounces back. There's always this up and down that goes. So we're kind of in our minds thinking this is probably going to go green today. Might not. So we're gonna take it from there. So Alan, we're looking at Goog, and yep. What's going on?
Well, this one gapped down below this line right here. So it started the morning here. And remember, the other days it was strong red, as you said. So, looking at the 60-minute chart, this was the previous day, Friday, big, strong red. And here it gapped down here, and then it's charging up the hill. And the problem with thinking too much, rather than seeing what it's doing, is we get into predictive mode. And that doesn't work as well as just saying, oh, well, I'm supposed to be doing this because the stock is moving that way. So anyways, the gap got filled, and you can see it's been hanging around to the plus side of it. And we say if you're not good with gap strategies, then don't trade the first hour generally until it's cleared up. So here it seems to be settled up, and it seems like the market is nice and strong, the black line here. And so we've got our two kinds of signals. We're outside the risk zone. We're above the bench. Everything's looking good. We've got lots of color indicators that tell us that this is looking like a good thing to buy. So that's what I did, is I hit the buy button here, just so you can see the percentages. And it's broken the 945 range. There's a lot of good things about this. It doesn't guarantee anything. But what it does do is it says, hey, probabilities, really good for me, which is what we're doing here. So hit the buy button in 1 minute, 2 minutes. I'm down about 8%. I'm not panicked because the market's still green, and I've seen lots of this before. So how's it looking? Well, it's also coming close to 10:30. So I'd be thinking about that I didn't have much time here, but I'm going to just keep an eye on things. It's coming back. The market's coming back, the black line. And now it's 10:30, and I have it changed to 5-minute candles, because that's just what I like doing, is automatically doing that. So now it's hovering and holding position. I'm thinking it's still pretty good because the market is still pretty green. Now I'm starting to see profit, and the angle is holding. So yeah, you get flutter sometimes. That's okay. That's where you have to learn not to panic, just like the overreacting of selling hard on Friday. And now what's happening today is what we pay attention to. We don't think about, well, it could and it should. We look at probabilities. It takes a while to get used to this, but there's not a rush. You have time. So here we're at 6%, we're at 11%, and we had to struggle a while to get that. So do you want to get paid or do you want to gamble? What do you think, Scott? I think Scott likes to get paid. So we're going to sell that. And now let's go look at another one. This is Goldman Sachs, and this was at just before 11. Even though it's just before 11, I like it because a couple things. Number one, the gap, let me get rid of that line here. The gap is actually, where was that gap? Oh yeah, the gap was here at this point. So it broke above that. So that's the point that I liked it. I didn't like it earlier. It was okay, but I didn't trust it. You can see how it came to the gap, fell off, and then now it's coming up. So it's safer for me to get into this thing as it's moving up. So let's just move forward. I know just a couple minutes before 11, but sometimes these things carry through, and getting in ahead of time is sometimes a good idea. So it's moving my way, and now it's 11 o'clock, a little bit of pullback. I'm at break even. There's not a problem. Market is still green, and that's where I'm starting to see getting paydays here. I'm at 10%, and that's enough for me. Is it super strong? Well, the market's not super strong, but you can figure these things out yourself for what you're comfortable with, because that's the most important. The worst thing you can do is just start trading and then getting scared. So we're going to look at one other one, and we're going to talk about what it takes to do a long trade, because if you want to get a long one, there's things you need to look at, and it's different than getting these short 10%ers. So this one turns out to be a long trade, so I'm giving you the clue right now. And it happened right after 10, so 10:02, so I got some safety here. And what else did I like about this thing? Well, it's been generally green on the previous days. You can see these are, each one of these with a box around it is a day. So this stock has been heading up into new territory. So hanging onto the green side might work. You can see that little simple piece of logic says, yeah, that could be a long run. So here we go. I'm going to go 1 minute, 2. So it broke the 945 top. It's still heading up. Now it's getting to RA. So it hit RA and pulled back. And we're back to about break even. So the question is, do you want to get out or you want to stay in? It's still looking okay, and break even is not why I'm here. So we're just going to wait and see a little bit. Okay, now it made a new high. So it's a higher high, and the market's strong green again. So this is one of the ones that I would hang on to. The little green star is a marker that says it's breaking to the upside. So it's broken RA again and higher. And I'm at 5%, so I'm not even at my 10, so it's not decision time. 6%. I'm at 8%, 9%. Now I'm at 12%. So this is the question. Do you stay in or you get paid? On one like this, it is a bit different because, yeah, I got into the trade here near the beginning, of course. You don't want to get into an old trade. But the market is reasonably green, and this is breaking outside of where it's been for the last 7 days. That's a good thing. So I would hang on to at least half my position on a thing like this. So how's it going? So presuming you got paid on half, 10%, there's nothing here that's telling me to get out. Look how strong that market is. That's the black line. It's going green, going green. Now the market is pulling down, but you'll see that the market is pulling down harder than the stock. I'm at a high profit here. I can actually hang on until the stock gets down somewhere around here, the stock, not the market, and I'd still make my 10%. So I'm in a safety trade. I can let this thing go. So the market's going down, but the stock isn't following. That means people love the stock, and it broke the $100 range. And usually you get some activity around the $100 like resistance, but it broke through the 100, stayed above it. let's see what's happening here. You know, if you're long trade, means you're going to hang on for a while. The market, you can see, is way steep down here. That's that black line. But this thing's hovering. So if you want to take your 23%, again, it's about your personality. You can go get paid. But if you're in for the long trade, that means you're in for these kinds of things where it's 30, 40, 50%. Where are we at? We're getting close to RB. Typically, you're going to get turbulence and pullback on another one of these target prices. So if you want to get your 40%, you can, but there's no reason to, because it hasn't hit it, and you're deep in profit. So I'm just, you know, what's it doing? Well, it comes to RB and it just busts through it and keeps going. Well, why would you sell? Well, you can get out because you have a rule that says you get paid at 50%. The market's now, for the first time other than this, is, you know, going red again. But it didn't last. Where are we at? Look at that nice solid line there. So you've been in this trade for about 2 hours, hour and 40 minutes, but you're up 80%. Yes, this really, really does happen. And there's people that get paid on these things. So if you want to, that's up to you. So it's now 12 o'clock and we've seen a turn in the market. This is the first time we've lost the green tint in the background. I have a simple rule. I'll give it just a little bit more time, but you can see that this indicator, the heavy purple and blue line, is gone, but the tint on the stock background is gone. I'll give it maybe 1 or 2 minutes, and then I'll just get paid. The tint didn't come back, so I'm just going to get out. So there you've seen a few different trades. We talked about short trades. Those are my preference. Just get paid, get paid. But when there's a long one, those are the clues. How does it look on the 60-minute chart? So you got 7 days in here. Well, it's been steadily climbing up. And finally, so you got 10% on 2 of them. You had to wait a little bit. And you got 75% that you had to wait 2 hours for.
Beautiful, Alan. Those are the home runs that we talk about. And like we said, they're usually pretty obvious when they come by.
Mm-hmm.
So thanks for joining.
I forgot to mention something important. I have another personal rule that we do talk about. See this target price? That's RC. Here's RA, and RB was this line right there. If it breaks 2 target prices, meaning the RBRC, that's a really good place to stop. And it still would have been about 75, 80%. So either rule, it's time to leave.
Because nothing in the stock market goes straight up or straight down. It's always waves.
Mm-hmm.
Wonderful. Thank you, Alan. Really appreciate you. Really appreciate you sharing this information. This has been the Day Trading this has been the Day Trading Stock Options Daily Review for September 12th, 2016. Below us in the descriptions are links to the courses. When you take the course, you get 30 days use of the Ways of Profit software. So you can practice, practice, practice. We get the replay. And decide if this is something you want to do or not. So we really appreciate having you with us, joined. And boy, I'm just butchering this today. I'm just so excited about that 75% increase. My mouth stopped working. But we have a Facebook group too, which is really good because you get that support that you really need. So we look forward to seeing you on our next exciting episode.